DraftKings has been an absolute growth machine, and the stock has been a huge winner for investors, up about 300% since the start of 2023. But all that could be unraveled as prediction markets become more prevalent in the US. Kalshi and now Polymarket are making their way to the US. You also have platforms like Robinhood embracing prediction markets. And guess what? These markets are far more efficient than betting on traditional sports apps. I'm going to show exactly how that works today and how this could disrupt businesses like DraftKings. Remember, DraftKings is under the sports betting provision. It's not legal in every state, but you know what is? Futures. And that's how platforms like Kalshi and Polymarket are making their way into the market. They're moving into sports, and it's a far more efficient way to bet on the sports market if that's something you're interested in. So let's dig into the numbers. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. If you want more from me, check out Asymmetric Investing, my newsletter. There's a link on the screen and a link in the show notes. That's where I'm building my asymmetric portfolio that has absolutely crushed the market. So love to have you as part of that community. I'm going to be using Fiscal AI throughout this video. They've got phenomenal charts, all the KPIs that you need, everything all in one platform, transcripts, insider buys and sells. And you can even ask artificial intelligence for details about those transcripts, so you don't have to listen to a 60-minute conference call. If you want to try out Fiscal AI, you can try it out for 2 weeks for free at fiscal.ai/ASYM. If you like what you see, you can get 15% off with that link. So check it out. This is a product that I use all the time here on Asymmetric Investing. So let's dig into the numbers with DraftKings. $24 billion market cap today. The crazy thing about DraftKings is they are worth more than any of the other big casino companies in the US. Here's another thing that I always think is wild is DraftKings is still not profitable. $333 million in losses in the past year. Why are they losing so much money? Well, the simple reason is this purple line right here, selling, general, and administrative. This is the customer acquisition costs for DraftKings to attract customers. So all the advertising that you hear on podcasts, that's got to be paid for. And that's paid for with these customer acquisition costs that dwarfs their R&D expenses. This is, remember, a technology platform. So you're going to be spending money on R&D, but you're spending about 5 times more on SG&A expenses. Now, they're starting to get some operating leverage in the business. So that's a good sign, but this is one of the things where they're leaning into really, really bad bets like parlays. And this is something that all of these companies are doing. They're also kicking off customers that are profitable and who are actually good at sports betting. I'm not saying that these aren't things that they shouldn't be doing as a business, but you have to consider that if customers are looking for a platform to place a bet, is that going to be the best place to do it? A platform that's going to be actively hostile to some of your customers. But the real big thing is that despite their size, despite that huge market cap, DraftKings is still not profitable, and competition is coming into the market. This just came out this week. Polymarket received a green light from the CFTC to be allowed to return to the US. So you go to Polymarket, you can see all kinds of things that you can buy a futures contract on. These are not technically bets. These are futures contracts, including sports. So I'm going to talk here about the NFL. You can put a position on for any of the games this week. There are props as well. So I know one of the arguments for some of the sports betting apps specifically is that you can get different bets than you can get on something like a futures platform. A lot of these are going to be available even on these futures platforms. Kalshi is another example. Again, let's go to pro football. You're going to be able to put a position in on a ton of the games here. And this is what I want to focus on, is the spread. You can see that Kalshi is making about a penny or a 1% return on any of these positions. So this is going to be the case with the stock market, for example. So if you want to go buy a stock or sell a stock, you're not going to be able to do it at the exact same price because somebody is going to be making a market in that stock. That's exactly what this is. So this is basically the fee that's involved with building a position. So what I think we're really going to see with sports betting and prediction markets is prediction markets are much more liquid. You can buy or sell a position at almost any time. And also they're much more efficient. Let's go through some of those here. I just pulled the DraftKings odds. This is for the Dallas Cowboys and for the number of wins for the year. So I did over and under everything from 3.5 wins to 10.5 wins. And this is basically the return on the bet. So just divided the amount that you would make as a profit divided by what you would have to actually bet. So an 11% return on betting that they're going to be over 3.5 wins. You go up to 10.5 wins, there is a 450% return if you win that bet. What I've shown on Robinhood is the exact same position, but on the futures market. And I've shown what these returns are. So a couple of these over 5.5 and over 6.5, it's actually a little bit better odds to do that through DraftKings. But overall, there are better odds. It is a better bet to be in the futures markets on Robinhood or on any of these prediction markets than it is on DraftKings. Ultimately, I think this is going to drive users to prediction markets. And the reason this is a big deal for DraftKings is these prediction markets are not going to be nearly as profitable as the bets that they're taking on DraftKings today. So you add all of these up, and I just added up the odds. You get 1,348.7%. That compares to adding up all of the odds for DraftKings, 1,148%. Not a perfect apples to apples comparison, but this shows just sort of the scale of how much better the odds are on a prediction market than it is on a sports betting app. Same thing for the unders. There's actually some pretty interesting things here. If you look at the 5.5 and 6.5, that's where you're seeing kind of the biggest price difference on the unders. So obviously the market is pricing these a little bit different on the prediction markets, but in total, these are actually going to be much better bets on a prediction market than they are on an app like DraftKings. So this is important for DraftKings because they have such high customer acquisition costs, and you got to be able to pay for those customers long-term. There's got to be long-term value. That's just not what we're seeing, at least yet. There was a positive operating margin in the most recent quarter, but typically the company has negative operating margins, like I showed earlier, negative net income, and yet investors are paying a pretty high price for the stock, about 4.4 times sales. So that's indicating there's a lot of hope that there's going to be future growth and margin expansion for DraftKings. But as prediction markets proliferate, and remember, there's going to be many more people who can participate in prediction markets than can participate in sports betting apps. Prediction markets are legal in all 50 states, and you can basically have a prediction market in almost anything. So that's going to put pressure on DraftKings. And the biggest problem is, even if DraftKings tries to move into prediction markets the way that a lot of other competitors like brokerages have, they're going to have lower margins. It's just simply not as profitable to be in a prediction market as it is in a sports betting business. But you don't have the same customer acquisition costs either. That's the advantage for a platform like Robinhood. Interactive Brokers is also bringing these in. Lots of different brokerages are bringing in prediction markets. That's where you're going to see those, not on DraftKings. I think this is going to be a huge pressure point and could actually eat away at their profitability in the future. So something to keep an eye on. If you're interested in these sports betting companies, the future may not be as bright as you once thought. Let me know what you think about DraftKings stock in the comments section below. Don't forget to subscribe to Asymmetric Investing, my newsletter. Like I said, a link on the screen and a link in the show notes. Thanks for watching, everybody. See you here next time.